Hi, and welcome back to the LLQP video series. This is once again Jason Watt, and we're going to talk today about RRSP withdrawals. Now, when we take funds out of an RRSP, that is taxable income. So income from an RRSP is taxable. And that's true of almost any dollar we take out of any kind of registered plan, that the dollar is going to generate some tax consequences. Here it's 100% taxable as ordinary income. So let's say that we have somebody who makes a $30,000 withdrawal from their RRSP, and this person is at a 35% marginal tax rate. Well, we'll just apply that 35% to that RRSP withdrawal. So $30,000 less 35% brings me down to $19,500. That will be my net amount after tax. However, you're not going to pay that tax until tax time. Now, the government recognizes a problem with this, and we see this all the time. If you ever earned a paycheck, you know this, that you don't get to keep your full amount of paycheck. Instead, it's very common in Canada to apply a system called a withholding tax. We apply this withholding tax against taxable income. So your paycheck has this applied, you know this, you earn your paycheck, you don't get the whole amount, and then come tax time, we would look at your withholding tax paid off your paychecks throughout the year against your actual tax bill. If your withholding tax is more than your actual tax bill, you get a tax refund. If your withholding tax is less than your actual tax bill, you end up with tax payable. There's a special rate of withholding tax on RRSP withdrawals. And that rate is, if you take income between $0 to $5,000, you will have a 10% withholding tax, and that's cumulative on all your RRSP withdrawals throughout the year. So we calculate that based on all RRSP withdrawals, not on each individual RRSP withdrawal. If you take up between $5,001 to $15,000, you'll have a 20% withholding tax. And if you take out over $15,000, you will have a 30% withholding tax. Those rates are different in Quebec, but in every other province they are the same. So this taxpayer in particular has made a $30,000 withdrawal, and they will have a 30% withholding tax applied to that. That is a $9,000 withholding tax. Now we can see up here that they had a $10,500 tax burden. So the result here for this taxpayer would be they would have an extra $1,500 of tax to deal with at tax time. Fairly straightforward. Okay, they would deal with that in April-ish of the year following the year of the withdrawal. Now, there are a couple of ways that we can grab funds out of our RRSP without having to deal with these tax consequences. We'll deal with the full consequences of death in a separate video. One thing that can happen, it's not the happiest scenario, but on a transfer of assets at divorce, if you have somebody who has to transfer RRSP assets as a result of divorce or separation to an ex-spouse or a soon-to-be ex-spouse, however you want to word that, there's also no tax on that. Like I said, not really the happiest scenario. Those assets would still be registered. They would just now be registered in the hands of the person who receives them. So there's no immediate tax, but we don't get away from that eventual tax liability. Okay, like I said, probably not the happiest scenario, but that's reality. Okay, so then we can look at another scenario here, another set of scenarios, and this is around the RRSP Homebuyers plan. The RRSP Homebuyers plan allows me to take up to $25,000 per spouse from the RRSP without any tax to pay immediately. Okay, you have to have the funds in your RRSP, and you cannot have owned a home in Canada in the previous 4 full taxation years. So you may have not owned a home previously at all. You may have been renting for the last 5 years. You may have been a non-resident of Canada for the last 5 years. And you also can use this to purchase a home for a disabled person under certain circumstances. Okay, so basically you take this $25,000, possibly $25,000 per spouse, and you use this to buy a qualifying home. The funds have to have been in there for at least 90 days prior to the withdrawal being made, and the purchase of the home has to be made in the year the RRSP withdrawal is made, or by October of the next year. And there are some fine rules around that. We don't want to go into the full level of detail here. But basically, this is it. So then what happens is you do have to repay this amount. Now, there are no repayments required in the year of purchase or in the first year after. So you don't have any repayments required right away here, but then you do have 15 years after that to repay. So after that, it's 1/15 per year that has to be repaid. If you don't make your required repayment in those 15 following years, then you're going to have taxes in that year as if you had made a withdrawal from your RRSP in that amount, which might not be so bad if you have a year with low income, for example. That might be something that's desirable. Now, a closely related concept here is around the lifelong learning plan. The lifelong learning plan is very similar to the homebuyers plan. Under the lifelong learning plan, you can take up to $20,000 per spouse. This is to pay for yours or your spouse's education, not for the kids, okay? You take it out a maximum of $10,000 per year. And then we have to make repayments at a rate of 1/10 per year. And those repayments are going to start in either the 5th year after the first withdrawal or in the first year when you're not in school. So the lifelong learning plan, homebuyers plan, very similar plans which allow me to withdraw funds from my RRSP without having to deal with the tax consequences, potentially ever, or at least until we fail to make repayments on the proper schedule. It is worth considering when you use either of these plans, the homebuyers plan or the lifelong learning plan, that you are giving up on the growth that those investment dollars would otherwise have generated within your registered plan, but that may be necessary in order to actually help fund the purchase of a first home or in order to fund this return to school. I hope that's been useful. We've discussed the basics of RRSP withdrawals here and withholding tax, and the fact that it's all taxable income unless we use one of the two qualifying plans, the Homebuyers Plan or Lifelong Learning Plan. If you have any questions, please let me know. Thank you very much.